SA 550 Related Parties. Nature of related party relationships and transactions. If related party transactions are in normal course of business, there may not be higher risk of material misstatements as compared to transactions with unrelated parties. If related party transactions are not in normal course of business, in other circumstances, they may have higher risk of material misstatements, like the circumstance like transactions not conducted under normal market terms and conditions, extensive and complex range of relationships and structure, which increases the complexity of a related party transactions. Information system may be ineffective at identifying, summarizing transactions and outstanding balances. Understanding entities, related party relationships and transactions. It is nothing but collecting information, and this is a part of risk assessment procedure. Auditors and engagement team shall gather following information from management: identity of related parties, including changes from prior period, nature of relationships with these related parties, type and purpose of transactions entered with related party, if any. SA 315 and 240 requires that engagement team should have regular discussion. SA 550 says that such discussion should include discussion regarding related party relationships and transactions so that it is useful to identify risk of material misstatements due to them. Maintaining alertness for related party information when reviewing records or documents. Following documents or records are good source of information. Auditor should remain alert while inspecting records or documents given below, as they may give information about related parties, relationships, and transactions which were not told by management previously. It is mandatory to inspect following documents: external confirmations, example from banks, legal counsel, third party, minutes, minutes of meetings of the shareholders, other records or documents, example scheme of restructuring, like amalgamation, demerger, etc. Documents which may be inspected to give information. Law related, Section 189 register, information supplied to regulatory authorities, filing with SEBI, Securities Exchange Commission, tax returns, renegotiated contracts, contract not in ordinary course of business, shareholders register, director register for transactions with the director, contract with those charged with the governance, a director or key manager person, life insurance policies, pensions plans with the directors, statement of conflict of interest by directors on various transactions, internal audit report, invoices and correspondence with professionals, investment register, identification of previously identified, unidentified, or undisclosed related parties or significant related party transactions. Confirm if auditor identifies arrangements or information that suggest existence of related parties or related party transactions not previously identified or disclosed to the auditor, then auditor shall confirm the existence. What if auditor confirm, identifies existence, promptly communicate information to other team members, where applicable financial reporting framework establish requirements with respect to related party relationships and related party transactions, inquire why entities control relating to related parties and related party transactions fail to identify or disclose, request management to identify and disclose all transactions with newly identified related parties, perform substantive audit procedures on identified transactions. Before we close the issue, reconsider risk that there are other undisclosed related parties and related party transactions and perform additional audit procedures. If such things appear intentional, it indicates risk of material misstatements due to fraud. Evaluate implications on the audit. That is, whether fraud involved or not need to be evaluated. Related party transactions outside entities' normal course of business, meaning professionals will have to apply judgments on transactions which are outside normal course of business. To access these judgments, they should see whether such things happen in particular industry or business. They can also see whether such transactions happens on recurring basis. Following may become transactions outside normal course of business. Asset related, leasing premises without consideration may be a transaction outside normal course of business. Complex equity transactions, corporate restructuring, internal restructuring or acquisitions, transactions with offshore entity where corporate laws are weak under a contract whose terms are changed before expiry, unusual, rendering management services without consideration. Regarding sales, unusual large discounts or returns, sales with circular arrangements, that is, sales with commitment to repurchase. These are the transactions. These are the transactions which may be outside normal course of business. Next, audit procedures for related party transactions outside normal course of business. Authorization, obtain evidence that transactions are authorized and approved. Inspection of contracts, agreement and other documents. Understand business rationale, that means logic behind the transactions. If there is a lack of business rationale, whether it suggests that the transactions were entered for fraudulent financial reporting, conceal misappropriation of assets. Call for management explanation and check whether it is consistent with the underlying documents. Whether such transactions are properly accounted and disclosed as per applicable financial reporting framework need to be checked. These are the things pertaining to significant related party transactions.